Alright traders, relatively uneventful day so far. You know, we've seen dollar yen open a little higher. I'm not sure exactly, you know, if there was anything gathering that. I mean, there was momentum already on Friday, and perhaps just the relief there was no missile tests over the weekend or dramatic escalations there from the US. I didn't really hear any tax talk plans. I mean, the big thing that could get dollar to rally would be tax talk plans, right? But it's still showing its color. It's showing it's a little bit of risk on appetite here in the markets, and stocks in the US and the futures have been relatively well supported as well all day, and so it's not surprised that dollar yen still well supported. If we do start to see pullback somehow, some way in the next couple of days in stocks, then dollar yen might struggle to maintain its recent gains, but you know, it should still be well supported on dips. So anytime it dips down, I'll be looking at that to buy. I think the Fed is definitely a US dollar positive risk rather than negative risk. And the euro has, you know, it's sort of been sideways action, and a lot of these rallies have been failing here. So let's not, you know, catch it until it gets above 120. Like I said on Friday, if it was above 120 as it was rallying on Friday, I'd be a little bit more concerned. It didn't get past 120, came back down. Today it got down to 119.20 and has stalled here, and then gone back up towards this, you know, the highs from Friday again. But you know, don't get encouraged that this is the start of something or the resumption of the trend here, because the you know, the only yields which are rallying at the moment are US yields. German yields are just checking them, haven't really moved much, and so you know, I can't really see a way in which. So what the big move is that the market's scared of is if the the German 10 years start to move towards 1%, and that's been sort of highlighted by a few of the big bond traders out there, the big bond funds, in recent months and recent weeks actually as well. That you know, there's only one way for German bonds to go, and that's higher, the yields, and it's just a matter of time, not a matter of if they're going higher, but just when. And so it's you know, that could really support the euro if that was to become a reality, sort of like the pound and its big moves. You know, supported really where the US dollar isn't that weak, but you know, European countries are even stronger than the US, and you know, left behind are the other currencies, yen in particular and Swiss in particular. Australian dollar really doesn't have a play at the moment. CAD's having a break after its big gains, and New Zealand dollar's got this election risk coming up this weekend, so you don't really want to be too punchy on either of these. And the rally today in the Australian dollar looked strong. Looked like maybe we'd chosen a new direction as it started to push higher in the Asian session, but it's just struggled to hold those gains. And you know, once again back like a magnet to this 80 level, and it's almost untradeable in a 30-point range around this. You know, you have to have faith. If I was going to buy, if I was going to play it, I'd buy the dip rather than sell the rally though, because I don't want to be caught with the Aussie busting higher there, because the in terms of who's holding the better hand, the Australian dollar probably is holding a better hand than the US right now. The US is contingent upon things to happen rather than things that have happened. So you need the Fed to come out a little bit more hawkish than expected. It wouldn't be hard for the Fed to come out more hawkish than the market expects, but there's definitely still downside risks that the Fed can be more bearish, you know, more dovish than the market expects. So the higher the, you know, dollar yen is into that event on the FOMC, which is really how you're going to gauge what's going on there, the more likely the market is, yeah, the danger is to the downside rather than the top side. So you know, even if they do come out hawkish and the dollar yen's at 112, they're not, you know, you're not going to kick it higher. It's going to be struggling there, because it sort of had a huge rebound in the last 4 days, 5 days. Stabilization at the very least, and it's by no means is there appetite out there, you know, to relentlessly sell any of these currencies against it, especially not the pound, right? And the Aussie dollar has been very difficult to sell. The euro is proving extremely difficult to sell. The only currency which is proving good to sell is the yen, and it's like the whole world is ganged up on the yen right now. Every pair is technically very strong against the yen, and so on any dip on any of the yen pairs is probably where you're going to find value. And good risk reward, and just most likely to make money, as long as North Korea and Trump don't do anything. I mean, there is this talk that, I don't know, that the diplomacy round is ending, and that there's going to be Next is going to be US military action. I think that's more bluster than anything else. I wouldn't read too much into that just yet. I mean, North Korea hasn't really done anything too crazy, right? You know, the missile across Japan's not great, but you know, there's no real catalyst to war, and you know, everyone knows what happens in that scenario, right? North Korea artillery will just destroy Seoul, and it's got like 10 million people there, and it's just, you can't take out the amount of positions they have. And so what do? You know, how do you actually attack North Korea and have a reasonable outcome? It's just, there isn't one. So, you know, there's a bit of posturing, I think, and I don't know exactly what the end game for America is. I think it's more just America wants to appear tough at this point than anything else. So yeah, let's you know, in any sort of build up on that front, I think could even be used as a buying on the dollar yen opportunity if that happens. But you know, we'll see. I'm not a politics major, and you know, America, I suppose, is pretty prone to war, and if you can get the excuse, perhaps the hawks in the US military and in the US Congress could somehow justify it. But yeah, it seems like it's just too big a risk to the South Koreans. So I don't see how they would go along with anything like that. But we'll see. We'll see. I mean, we'll see what the end game is for North Korea. You think that what's going on there is all about Kim trying to get a good negotiating position, yeah, from the strongest negotiation position as possible to then re-engage with the world with, you know, huge rounds of peace talks and concessions from most of its neighbors in the US to give up its nuclear weapons if that's the plight. But they're playing a pretty aggressive game, aren't they? So it's it is unpredictable. It is unpredictable, and you know, perhaps we shouldn't be so gung-ho to buy on the dips, but you know, it still seems to me to be the right way to play it. I doubt that, you know, the market's becoming a little bit immune to. You could see this on the Friday action. You know, as soon as the market came into the start of the Japanese session, they just bought the dip, and US stocks didn't go down much at all, and there was just relentless higher. So you know, you really don't. If you're short dollar yen, you want the US dollar to be weak more than you want North Korean crises, because that's a short-term thing. You want a long-term, medium, you know, return to downtrend in the US dollar. If you're looking at the dollar index, it actually hasn't moved, you know, too high, and this is probably because of the pound and the euro remaining pretty strong. So the rally in the dollar yen, dollar index, has struggled to maintain, and you know, with the pound rallying, you have seen a pull back down. So the rally in dollar yen hasn't even offset the, you know, rally in the pound, so it's not really that big a deal in terms of the dollar index anyway. So you can't even say the US dollar's out of the woods yet at all. But it could be basing, right? And that's, if it is basing, then the preferred way of playing long dollar is dollar yen long rather than short euro, because you always have to deal with what comes next. So what's that? The October meeting of the ECB, and that's not that far away. So short-term tactical selling is possible, but yeah. And then, you know, as we get closer to the end of the year and data in Australia continues to be strong, you have to think at some point that, you know, the market will start to price in the chance of rate hikes earlier than expected. And that's, you know, it could be the next big rally that comes as well from the Australian dollar. It could be the next currency to get into the central bank radar. At the moment, it's around about 8 months away for the first rate hike. But it doesn't take much to change that. You just need a strong inflation print. And, you know, we haven't seen strong inflation around the world, but, you know, if that becomes a bit of a phenomena, then you could see that. Now, you know, we don't see wage growth as well. But, you know, perhaps the central banks stop worrying about that so much as well. You might see 2018, the year that central banks give up on inflation, just start to normalize rates with strong employment and full, you know, strong growth alone. And that's been touted by a lot of economists, actually. Economists are not all on board that the inflation has to be 2 to 3%. Maybe 1 to 2% is the new normal now, and the markets should be, the interest rates should be a lot higher in this environment. In fact, low interest rates are stopping the in stopping the inflation is the argument from some economists. So, you know, there is ways, you know, economics and, you know, central bank theory evolves over time. And so, you know, the interest rate numbers the inflation numbers that they will target can definitely get lowered. So 2% seems to be what everyone wants, right? Above 2%. Well, that's enough of a rant there on the backdrop of the global economy. The main reason for that is, you know, there isn't much to play here. Unless you're going to be looking for a dip to buy euro yen and pound yen and dollar yen, there isn't too much to get excited about from what I can see. The pound has run up so much that Brexit headlines in the next couple of days could be very damaging to the rally, because by no means is Brexit being solved at all. And the thing that's come out today that's sparked a little bit of selling in the pound, you know, this whole Brexit, this whole Boris Johnson's going to be challenging Prime Minister May for assurances about how she's going to handle the big Brexit bill, and reports that a couple of the senior ministers or senior officials in the Brexit committee are quitting. It doesn't look that great. You know, there's a little bit of downside potential. Now, not from the Bank of England and their stance, that's where the big rally is coming from, but just the next little part of the Brexit negotiations might be a little less, I don't know, progressive as the current ones. But let's see if we've missed anything in the macro. It's not like I spent the weekend reading the end of the US session over on Friday. So what we're going to read here is or just glance over, is the Jim Reed early morning read from Deutsche Bank, the most widely read macro report out there. So that's the main reason. In terms of my positions, before we get onto that, I closed out equity highs here. So I haven't got any positions on, and I'm just waiting for a good opportunity. You know, in terms of where I want to buy dollar yen, around about 110.80, and euro yen as well. But we'll look at euro yen in the context of what's going on if the dollar yen falls. If dollar yen falls and the euro's above 120, it actually means that the euro yen probably hasn't moved too much, and that could you know, make it not as good risk reward. So euro yen's at day highs right now, even led by the euro itself, not dollar yen. So yeah, euro yen on dips if we get some, mainly if it's led by a dollar yen dip. But if you don't get that dollar yen dip, then you know, I'm not really interested in buying a euro led dip in the euro yen. That's for sure. In the pound yen, it's hard to know how far it can pull back, but you know, I would be looking for at least 100 pips more from here, just to be half reasonable in where you're looking at the bottom. See what happens if the dollar yen gets back to the 110.80 and maybe the pound gets back to 135. That'll probably bring it back 100 points more. But yeah, I'm not really in tune with this rally. I was a little off guard by it, so you know, I'm not the best one to try and chase it now. It's a little come lately if I start to be, oh, let's buy a pound on the dip, because it's not really a trade I super believe in. Long term, yeah, for sure. But you know, the Bank of England and how much they're going to raise rates, probably only once or twice or max. They're not really in a rate hike cycle. They're just trying to get out of their emergency rate cut setting that they did after the Brexit. Same as the Bank of Canada. They're not in the rate hike cycle. They're just trying to get out of their emergency cuts they did after the plunge in oil. On the oil front, it is interesting that it's back above 50. Now, it has struggled above 50. The last couple of times we've been above it. So we really want to keep an eye on how this rally continues. If we do establish a few days above 50, then that does help the commodity currencies, does help Canadian dollar start to focus more on the next leg higher potentially. And it has been stalling here for the last couple of weeks. And so it's probably about time that it chooses a new direction. And you know, if oil was to start to creep higher towards 53 or 54, 55, then you'd expect the dollar CAD will be testing 120. And the Aussie dollar might lift away from 80 at the same time. Yeah, gold's under pressure. Same, you know, dollar yen, gold have a very strong relationship. And with stocks at all-time highs, gold's not the first thing you go buy on the dip, that's for sure. And North Korea is settling down a little bit. Then that's it does put into focus now the 1300 level. Looks super dangerous to be buying here. It doesn't really fit. Doesn't really fit. If anything, it looks a little like it's under pressure here. But 1300 would be a nice little level to see how the bulls want to play, and we can potentially buy off that if the right sort of price action is. You don't just buy a level though, you let the market test it, then it starts to rebound, then you can hop on. That's a safer way of playing pullbacks. You don't get the bottom, but you don't get killed in breakdowns. Let's have a look at some of this research out. Yeah, so I don't have a strong view on how to play it. I mean, I want to buy dollar yen on dips, and I think the Fed's going to provide potential US dollar catalysts for the next couple of days. The market will be more skittish towards selling US dollar, you'd expect, in the next 2 days because of the chances that the Fed is a bit more hawkish than expected. But that's not like the biggest conviction trade of the year. That's just like a speculation on how the market's going to play out for the next 3 days before the Fed. And so it's it's not a big play. It's just a short-term tactical play. And so for those who don't know, there's a German election on this weekend. But with Merkel in such a big favourite, it hasn't really got the latest. But there's supposed to be a big speech from May. I've read this in multiple reports today. Alright, so she's got a new update for her vision, and that she'll be doing that on Friday. So that could be the big event of the week if Yellen comes out as neutral or wishy-washy, then the US dollar might not actually move that much, and the announcement of balance sheet reduction is being well broadcasted ahead. So we've been talking about it for years now. So November rate hike probability is jumped from 18% to 64%. So there's still a bit of room there for it to go towards 100%. And that means there's still a little bit of room for the pound to outperform everything. So Deutsche Bank expects that Yellen commentary during the press conference will still anticipating raising rates one more time this year. That'll be supportive of the US dollar. Merkel winning doesn't hurt the euro, that's for sure. So you might see a little bit of sympathy rally on Monday. Now what we do have is a lot of traders trying to sell the stock market right now at fresh record highs. I think it's crazy and there's too much going on to sort of support the market at these levels, and that's just getting to dizzy heights, and that eventually you'll get a pullback. Now the way to play that though is not so much to sell the stock market, because the percentage moves you can get killed on the way up here can be substantial. The way to buy risk off is probably via something called the VIX. Now if you don't have I don't know if I've got access on MT4 here. No, we don't have it. Alright, so what the VIX is the fear index, and it has the ability to rally 20, 30, 40% in a day if the stock markets fall 300, 400, 500 points from the relatively very low levels that it is now, because at all-time highs you do get the market near these levels that are very hard for the market to go lower than. So let me just see if I can find it. Second. So the VIX is, if the stock market goes up another 5%, the VIX won't crash from these levels, because it can't. It's just not the nature of it. I don't know what I just clicked on in October. So this level here is like the low level. And if anything happens that can cause the market to spike higher, you will make literally 20, 30, 40% on your holdings. And the downside risk, that's a fake move. The downside risk is that at this particular contract's never really held below 10. Even below 11's like makes the news. So the potential downside is very limited, whereas potential upside is up to 25 if stocks in US start to crash. So why would you play this versus stock market? Because the stock market, if it goes up to 22.5 or 2300 in the next month, is going to kill you, right? If you're leveraged up. Whereas the downside, it's not even easy to hold the market through the downside. And you might get 500, 600, 700 points, but that's a one-to-one return. Whereas the VIX, you're risking 2 to make 20, or 2 to make 10, 15. So that's the benefit of it. Now the other side of this is that if nothing happens, every day it grinds lower by like 0.05. Right, so every day it does grind lower. That's just nature of the pricing of the product that you're buying here. This is related to the price of options, and so the market dropping down is very natural. But in terms of how much that's going to hurt you, you're risking 1. If nothing happens, you'll get to 1. If stocks go to all-time highs, you might lose 2. Right? So if the stocks go up 600, 700 points. But the other side of the equation here, if anything negative happens, the market's going to shoot from these levels. These are levels that are not, really long-term sustainable. These are like the lowest volatilities ever sort of levels. So if you've never traded the VIX, have a little look at it. It's not a bad little product. If I could trade on an MT4, I would. What do I think about Carney's speech? I haven't really been registered that it's going to be that critical. I mean, it's just so much in focus because the pound's movement. I mean, this is the one guy who can talk down the pound. if the market's got the expectations wrong, which really doesn't make sense that the market's got it wrong here, given that the most dovish member of the Bank of England spoke on Friday and talked it up, right? So he's NPC member Vilay. He talked up the chances of rate hikes as well. And you know, he has to have some respect for the other members of the MPC. I don't think he can come out and smash down the pound. But if he doesn't really come out as hawkish as the market is now flipped, then it might open the door to a pullback. But that pullback is what we want, because we want to buy that dip. So if you're not in the pound market, what you want here is you want a dovish Carney, so you can buy the dip. Yeah, that would make a lot more sense here. That would be fantastic. I don't think he can come across super, you know, hawkish, and the market's going to respond by going to 138. It's possible, but we're not. You know, we've rallied already so much. So, you know, the market is hawkish now. If he comes across hawkish, that's not a huge surprise as well. So yeah, if he wants to talk it down, we'll know pretty quickly. But I'm not in the pound, and I haven't really been watching it too closely. I've been watching it go higher, but I haven't really been watching it in terms of getting into a trade. So once I get the pullback though, that's really my style of trading, is to get into the market on pullbacks and trends. See what UBS thinks about the market as a whole here. Euro USD like to be rangy ahead of the week's FOMC. Yeah, I think that. Selling rallies towards 120. Dollar yen's impressive one-way street. Yeah, so some sort of buy on the dip here scenario looks good. Especially if it's because of a comment. You know, a comment from Trump, or a comment from, you know, something which gets the market to snap lower but then settle down, and then we can buy it. That's the best sort of opportunities we're getting at the moment. It'd be ridiculous if Carney changed the tune of the MPC statement though, wouldn't it? So looking for dips below 135 to enter fresh long. Next target 138. There's no reason we can't get to 140, guys. Alright, so yeah, it's going to be one of those weeks that's not really you know, every day something to watch, but you know, we do have the FOMC that could provide a bit of volatility, and you know, the market is sort of poised here to sort of break out or not with the yen crosses, and that way we do have a little potential volatility coming from there, but it's not the biggest week right now in terms of I'm not expecting it to be like last week. Last week was pretty intense. BOJ on Thursday as well, but they've been very it's been the sort of the weakest central bank in terms of making any changes. Alright guys, I'll leave it there for now. That's I touched on everything I wanted to touch on, and since I don't have a real trade to give you, I'm not going to yap on about potential trades. We'll wait until we do get into some levels. I'll try to post a trade here in the chat if I get into either you know, pound yen on the dip, dollar yen on the dip, or euro yen on the dip. I feel like I understand the dollar yen a little bit more than the euro yen here, about where the euro's next move is, but the euro yen is starting to look like the strongest pair. If you do want me to look at particular crosses, then please send me a PM and I'll look at them tomorrow. other than that, trade safe, and hopefully next tomorrow we're in a couple of trades or about to, so we can start setting some limits. Okay, yeah. So Euro Pound's a favorite pair of mine that I didn't catch the top, and we talked about it many streams, right? We talked about the catching the top as we got back to the Brexit highs here. So the market reversed before that and then fell off a cliff. In terms of where you'd like to be entering, honestly, I want to enter at the 90 level, as close to it as possible. So if we can get some volatility or some pullback or some Brexit negotiation fears, that will get us back towards that 90 level. Then we can start about selling. Realistically, you shouldn't see it back above 89 very easily. Yeah, the market's probably going to cap that out, tap out any rally relatively quickly. 80, 88, 60, I suppose is good to start looking at it. If you get a nice little price action rejection off it, then you can try and sell there. But yeah, selling is my preferred way of playing it, not looking for the reversal. You're a little late if you're looking for the reversal. If you're in now, then watch to take profit between these two pairs. You require something new to break up to 90 cents. It's not like the market's just going to be that nice to you, give you that big pullback, because this is not a reversal technical. This is a reversal based upon this part here particularly is based upon the Bank of England. So yeah, don't expect it to get back to 90 cents too easily, but selling towards 89 cents makes 89 pence, sorry, makes sense. Alright guys, best of luck with your trades. I'll be back here on same time tomorrow.